Good morning. We are back. We've got a really, really big breaking news story from JPMorgan because they lied. But if you guys have been watching the show, you know that JPMorgan is full of miscreants, unscrupulous individuals. And we also got the Genius Act approved via the Senate. However, Congress still needs to, I believe, sign off on it. Same with the current sitting president. So we're going to talk about all of that stuff because there's a lot going on. Really, really, really a lot going on over here. And it's exciting stuff because maybe, just maybe, we'll finally have some sort of run soon, hopefully in Q4 at least. Anyways, welcome back to the O Show, everything crypto every day. I'm WendyO. If you guys are brand new here, welcome. We're going to give a quick shout out to our channel members, Mr. R, Mr. Jermaine, Mr. Alpha Junkie, Mr. A, and who else? And of course, Mr. D. Now, with that being said, let's go ahead and get straight into it because there's a lot to cover in a very short period of time. And yes, I am absolutely exhausted today. And my hair is dirty and dusty, but hey, that's what happens. Good morning, Alexandra. I hope you're doing well this morning. All right, let's go ahead and get into it and talk about what's going on with JPMorgan. Because honestly, I'm not surprised, and you shouldn't be either. But at the same time, it is what we're seeing happen is we're seeing traditional finance that has just said terrible, horrible things about crypto all of these years come into crypto because there's opportunities for them to make money, and everything is essentially going to get legalized soon. That's exactly what we're seeing happen, and it's very unfortunate the way this is all playing out, primarily because they lied to retail for a very, very, very long time. They lied to the general public. They lied to retail. They lied to everyone. But it looks like one of the projects that they're probably going to go pick is going to be Ethereum. Because remember, Base is a layer 2 solution for Ethereum. And remember how Ethereum, I talk about this a lot. Remember how Ethereum merged over from proof of work to proof of stake. And then on top of that, they were focusing on their layer 2s, but not necessarily their layer 1s, the layer 1. And that's why Solana came in. So let's go ahead and talk about this story over here from JPMorgan. JPMorgan to pilot deposit token JPMD on Base. So the world's largest bank, JPMorgan, filed a trademark for what appears to be a stablecoin called JPMD. Why did they file a trademark for this stablecoin? Well, each bank is probably going to have their own stablecoin. Each large corporation is probably going to have their own stablecoin, and JPMorgan doesn't want to get left behind. Some little hints that we saw leading up to this is going to be the Genius Act. So they probably knew it was going to get approved because remember, they lobby, they give money to all these public servants, and they kind of have a little bit of knowledge about what's going to happen. In addition to that, it was announced, I want to say a week or two ago, we covered extensively on this channel that BlackRock and JPMorgan created some sort of partnership to utilize the Bitcoin spot ETF, IBIT, BlackRock's, as loan collateral for loans. So JPMorgan is going to accept your Bitcoin spot ETF IBIT. You want to go ahead and take a loan out, which is a little bit crazy, right? Because they really didn't like crypto. Jamie Dimon went on publicly multiple times to say atrocious things about crypto, but here they are. They're going to be launching their own stablecoin. They filed a trademark for it. So if the Genius Act gets approved, this will be the stablecoin. And they are going to pilot it on Base, which is the layer 2 solution for Ethereum. Base is a decentralized chain for Coinbase with no token associated. Also, JPMorgan meets with the SEC to discuss capital markets moving on chain. Why would JPMorgan do that? And they just randomly decided to do it. No, this has been in the works for a really, really long time. They just lied. They lied to all of us. And if you've been in crypto as long as I have, or even just recently you've been watching the channel, you knew exactly what was happening because we talked about this. And again, the Genius Act, I'm going to talk about right after this. I was going to talk about it at the end of the show, but the Genius Act, I know a lot of people are going to disagree with me on this, but I really think it's going to help usher in that CBDC because it's basically giving the green light for institutions, large corporations, and whoever wants to start a stablecoin, which retail won't be allowed to do so. Retail is going to get excluded from everything, but basically they're going to merge crypto and traditional finance together, and things are going to become more centralized. So let's first go ahead and cover what's going on with JPMorgan and Base. So JPMorgan, they're launching a deposit claim token called JPMD on Base. It's not a stable coin. A deposit claim token is a digital commercial bank money-backed deposits at JPMorgan. So it's kind of like a stable coin, but it's not. To me, it sounds kind of like a a little bit of a receipt saying, hey, this happened. And they're going to be running the pilot on base. However, I do think that they will issue a stablecoin once all of this gets pushed out. Approved for Coinbase institutional clients, so they can use it first. So if you're part of Coinbase and you're institutional, you get to use it. Retail doesn't get to use it, and I don't even think accredited investors get to use it. Broader rollout depends on regulatory approval, and the first use of public blockchain by JPMorgan's for deposit. JPMD may earn interest and get deposit insurance, unlike stablecoin. So basically, they're making a derivative of a stablecoin. So it's not a stablecoin, but it kind of is, and it's only going to be only certain people are going to be eligible to use this. And this is why the Genius Act is so predatory. Again, is it going to pump our bag short term? Yes. Is it going to the next quarter, is it going to, or the next, until we get a bear market, are things going to be okay? Probably. But as time progresses, we're going to see retail lose more and more privileges from crypto, unless you participate in DeFi. But at the same time, it's going to be, everything's going to get merged over from crypto. There's not going to be a whole lot of decentralization left. And that's because that's going to be due to the Genius Act and all the other stuff that they're pushing through. So everybody else gets to earn yield on stable coins and similar financial instruments, but not retail. And a lot of people think, oh, Wendy, Trump's going to abolish the accredited investor law. He's not going to. And then as far as JPMorgan and the SEC, they meet to discuss capital markets moving on chain. So their representatives met with the SEC Crypto Task Force to discuss moving capital markets on chain, basically meaning everything operates 24/7, 365. It's going to help them save on fees so that they make more money on the bottom line. And it's going to allow for their customers to trade 24/7, 365. It doesn't let us know who. I mean, because this is still very, very early. We don't know who this is going to benefit besides them. Topics include risk and benefits of public blockchains for capital markets and JPMorgan's crypto services. I also believe JPMorgan had some sort of on-chain activity that they were doing. I forgot what it was called, though. Anyways, taking a look at this next post over here about JPMorgan. This is from Nate Garassi, ETF expert. JPMorgan met with Crypto Task Force today. Guess what one of the topics was? Reviewing the potential impact of existing capital markets migrating to public blockchain. So what I think is going to end up happening, why would they, why no retail? That sounds prejudiced. Well, because they want to keep you poor. And the best way that they can keep you poor and keep that wealth gap, keep the wealth gap going is saying, you don't make enough money to get these special privileges because you're stupid. That's exactly what it is. So, all right, now back to this. So basically, a lot of these public blockchains are going to end up becoming more centralized and private as time progresses, and just in my personal opinion. But it is what it is what it is. And now I kind of want to segue into the Genius Act a little bit, because it's pretty important stuff that's happening. So Genius Act passed the Senate in a final vote for 68-30. Now it's on to the House. Now it's going to go to Congress, and Congress is going to see if they're going to go ahead and approve it or not. And if Congress approves it, then it's going to go to the president. President will sign it, and it will go to law. This is the Genius Act summarized, and it's from TFTC, a really popular Bitcoin podcast. But it basically lets you know who can issue stablecoins, insured depository, subsidiary, federal qualified issuer, state qualified issuer, qualification factors, ability to meet reserve requirements, previous felony offenses, competence, experience, integrity of officers. This over here is funny because anybody that's in traditional finance, like I automatically don't trust them. Why don't I trust them? Well, because they haven't proven to be very trustworthy since the 2008 housing crisis. And if you can prove me wrong, please do. Reserves, 1-to-1 backing in Federal Reserve balances, cash, demand, deposit, treasury instruments. Rehypothecation is generally banned. Redemption, disclosure, of course, disclosures. Clear procedures for timely redemption. Issuers must publish a monthly audited reserve report plus annual independent audit. Do banks and does TradFi have to do that? I'm curious. And then can't market stablecoin as legal tender or that it's FDIC insured. That's kind of wild because there has to be some sort of insurance coming into it from somewhere. But maybe that's why they don't want retail to have a seat at the table, because it's not FDIC insured. But at the end of the day, even though your bank account is FDIC insured, it's only insured to a certain amount. And God forbid there is an absolute a real banking collapse. You're not going to get your money back. I only think they have enough to back like 2% of deposits or something ridiculous. And they're going to get their friends They make sure their friends go first. Preemption, Fed versus state. Federal license supersedes state requirements. OCC chartered issuers are exempt from state MTL. States can license issuers if they have substantial similarity to federal requirements and 10 billion outstanding. State license issuers have nationwide passporting, can't operate in other states. That's a cool one. We like that because it makes it easier for cross-border payments or whatever it is you're doing. Custody, reserves and private keys must be held by FDIC, NCUA Bank. That doesn't make any sense because if the custody has to be held by an FDIC or NCU bank, why wouldn't it have FDIC insurance? AML, BSA compliance. Issuers and custodians must be able to freeze tokens on lawful order. That's centralization, 100%. But we know that stablecoins offer this. That's just how it is, which is kind of crazy because when you think about the early days of Bitcoin, one of the main selling points that Maxis tried to push was that Bitcoin, the transaction couldn't be reversed. So for all these chargebacks, it essentially helped to stop fraud. But now they're going to be doing that, which again, this is very CBDC-ish. Treasury may block non-compliant foreign stablecoins. It's going to be anybody that pisses them off. Consumer creditor, non-authorized issuance carries up to 1 million day fines and 5 years in prison if you're bad. Also, too, this is Mr. Scott Bessent, and he basically says recent reporting projects that stablecoins can grow into a $3.7 trillion market by the end of the decade. That scenario becomes more likely with the passage of the Genius Act. He says it's a win-win for everyone involved, private sector, the Treasury, consumers. What about retail? This newfound demand could lower government borrowing costs and help rein in the national debt. It could also on-ramp millions of new users across the globe. Yeah, we know that, but how is it helping retail? It's not. It's not helping retail because retail is not going to get the same seat at the table. Retail is not going to get the same access as everybody else, and that's problematic. So I don't really like it. And the fact that it's going to strengthen our economy and everything that's going on, what? What? Really? Really? So basically, to me, that just indicates that they're going to merge everything over. They're going to make the U.S. dollar digital, and it's become a CBDC. So again, I don't like it. Yes, it's going to put a lot of money into crypto in the markets. People are going to make money, but it's not going to be it's not long-term good, in my opinion. Also, too, for this from my buddy Andrew, the Genius Act will change structure of banking system in the next 6 to 24 months. In case you're wondering why Circle's share price is up 380% since its IPO. And I agree with him 100%. And I even posted this on my page because Circle really, really, really launched at the right time. Circle hits new all-time high. Circle is like the stable coin of America for the most part. Coinbase is very much invested in them. It was pretty interesting because you guys remember how there was a rumor that it was Coinbase or it was Ripple that had tried to buy Circle. So again, Ripple had some sort of inside information and they wanted to buy Circle because, for the Genius Act and multiple things. And I thought it was a smart idea, but it makes total sense. So now I'm curious if this was all if Circle did that as a marketing tactic, because I know that XRP is one of the most popular coins and the crypto community is always paying attention to it. Could be. Very, very, very much could be. What was next? And then this is Chainlink's thoughts on the Genius Act and stablecoins, because you have to remember Chainlink provides a lot of provides infrastructure essentially for stablecoins because of their CCIP and the oracles and whatnot. So hold on, where's that little? I want to read you guys a little caption over here. Okay. All right. So basically, Chainlink said that the Genius Act vote marks milestone in stablecoin regulations because stablecoins already exceed $250 billion. And then what did Bessent say? He said stablecoins could reach 3.7 trillion. And if we just take a really quick look at the entire cryptocurrency market cap, even including Bitcoin, we're at $3.19 trillion. So if in the next 6 to 24 months, things really, really kick off with stable coins. And what is he calling for? He's calling for, he's calling for $3.7 trillion by 2030. What do you think that's going to bring all of crypto to? I don't know how much market share that, Circle and USDT have, but I do want to take a quick look at that because things are about to get crazy. So we got Tether. Tether's market cap is at $155 billion and USDC is at $61 billion. So it's about $200 billion that we had, about, my math is so bad. Oh my God. Anyways, it's billions of dollars, millions of dollars, and it's going to continue to increase with the Genius Act passing. Sorry, guys. I just got like a little bit of brain fog. I'm a little bit tired. I've been working out too much. But anyways, it's going to pump the entire crypto markets, and that's exactly why they want it to happen. Now, back to our to finish covering what Chainlink is talking about. Yeah, stablecoins already exceed $250 billion. Apologies, I said that incorrectly. But basically used for fast, low-cost settlement 24/7. And Chainlink provides proof of reserves, cross-chain connectivity, and compliance tools, which is needed for scaling of stablecoins. They have POR, CCIP, and then the Genius Act is going to boost stablecoin growth. So this is why Chainlink is one of these coins that I really, really like a lot, because I think it's going to continue to do incredibly well. Because a lot of these stablecoin people are going to have to use it. They're just going to go ahead and take a look at it. Now, I do want to do a quick market update just because there's all kinds of cuckoo-ness happening with the market right now. We're tired. We're very, very tired. And plus, with all the geopolitical uncertainty, Bitcoin's not doing super great. We haven't tapped back on 102,000 yet. However, it does look like we're going to continue to head down. So we'll have to kind of reevaluate once we get between $102,000 and $101,000. But it does look like we are going to continue to head downward. Ethereum is not doing super great. We'll probably hit about $2,400 or possibly $2,300. Solana is also falling as well. So unless we're able to really flip back above these important areas of support, we're just going to get back down to the previous level that we were trading at. Sui dropping really hard as well. Similar scenario, similar pattern. XRP is also dropping. I would expect $2 if Bitcoin dumps. Chainlink, despite all this insanely crazy bullish news, this should be pumping like crazy off of fundamental news, but it's not. And it just tells you what type of market we're in. And then ADA is also hitting at 59 cents, and HBAR is going to head back down to about 14 cents. So the market just is not reacting the way that it used to off of crypto news. Bullish crypto news. But hey, that's just where we're at right now. So it gives us more time to accumulate. This story over here is from Ohio about Bitcoin. So Ohio's Bitcoin rights bill, HB 116, passes the House, and it protects self-custody, safeguards mining and node running, and creates $200 capital gains exemptions from digital asset transactions. These are important, and we'll have self-custody on the federal level, but whatever your states decide, that's going to be the most important part. So I highly recommend writing all of those guys and letting them know what's on your mind. Also, we do have to talk about our partners over at Brave. Primarily because they're doing some really real cool stuff. So Brave isn't just a privacy browser that you get to earn the native token BAT on, but they also have a VPN. They give you privacy when you're browsing, but apparently they've got their own AI, and it's called Leo. So it's their browser's AI assistant, and it has a new powerful feature, basically for searching for a job. And apparently in this little video that they got, Leo analyzes resume, listing, and advice links to make a tailored resume. And this is actually going to be incredibly important. Yeah, I know that we're going to have, there's going to be other platforms you can use as well to do this type of stuff. But I like to support crypto platforms. And I think it's really cool that they have that feature for you. Because again, people are going to be using AI for everything. So I don't know, maybe test out Chat GPT and then what's going on at Brave and see which one works better. So if you're looking for a job, take a look at Brave. Polygon said Leo isn't bad. Awesome. Thank you. Thank you. Now let's go get into some altcoin news, okay? Unfortunately, the SEC delayed the Solana spot ETF from Franklin. However, I got a video coming for you this week indicating why I think we will be getting a Solana ETF soon. Also, too, following a prior delay on June 17th, the SEC is inviting public comments on whether to approve or deny CBOE's proposal to list XRP spot ETF, which is interesting because America is still essentially suing Ripple because the case isn't over yet. But Canada approved the first XRP spot ETF. DTCC lists VanEck's proposed spot Solana ETF on list of active pre-launch funds. This is indicating that we are going to get that Solana approval soon. It's coming. It's very much coming, and I really, really hope that it's going to have staking, because that's going to be a game changer. Then we'll get Ethereum staking coming as well, which will do pretty well. Primarily, we also have that news with JPMorgan utilizing Base, which is the layer 2 for Ethereum. And then some other great news for Solana. Tokenized stocks are coming, and they're essentially kind of partnering with Ondo Finance on this. So Ondo Finance launched Global Market Alliance, which is an alliance of leading wallets, exchanges, custodians to bring capital markets on chain and set standards for the interoperability and on-chain stocks. So it looks like they've got 1inch, BitGo, Fireblocks, Rainbow, Alpaca, Trust Wallet, BitGet, Jupiter, Solana Foundation, and Ondo. So again, this is pretty cool. And this kind of coincides with RWAs, and it also coincides with JPMorgan wanting to move markets on chain and then meeting with the SEC Crypto Task Force to discuss it. And then this story over here, BlackRock's $2.9 billion tokenized treasury fund now accepted as collateral on crypto.com and Durbit. This is really, really cool. So we talked about JPMorgan accepting BlackRock's IBIT as loan collateral to get, to take out a loan to buy whatever it is you want to do. And then now this was just announced that BlackRock's $2.9 billion tokenized treasury fund is going to be accepted as collateral on crypto.com. And I'm telling you, crypto.com is done really, really, really well sustaining all these years. I remember them in 2017 before they were crypto.com. They were MCO. So I think that that's super cool. And in addition to that, a lot of people are just kind of moving away from Coinbase and going to crypto.com and Kraken. So 'tis what it is what it is. Now, this one is another interesting story about hype. We don't really talk a whole lot about hype on the show over here, but I think it is important. Inovia launches 50 million hype treasury, announces rebrand to Hyperion DeFi. So I want to read this one to you because we don't talk enough about hype, and we should, because it's really popular decentralized exchange, and I think it's some pretty interesting stuff. Pretty interesting stuff. And again, hopefully DEX's, Paul Atkins from the SEC, who's the current chair that replaced Gary Gensler, hopefully him and the rest of the SEC keep their promise and they exclude DeFi from crypto regulation, because it's not DeFi if it gets included. But basically, Inova is a NASDAQ listed digital eye care company, again, tech and healthcare. It's the first U.S. public company to hold hype, and it's going to rebrand to Hyperion DeFi. We'll change the stock ticker to HYPD. Core eye care business will continue alongside new DeFi strategy, and the goal is to become a top hype validator and launch staking program. Hype token to hit an all-time high recently, and again, no crazy price action on this news, but again, companies, especially NASDAQ companies that are creating treasures, we got Solana, Ethereum, what else? There's so many. Solana, Ethereum, Hype, XRP. More and more are coming. So all of these coins that are being added to different treasuries for public companies, I would pay attention to them and start doing your due diligence in the public company and that crypto asset. Now, our partners over at Hedera Foundation, they have some really interesting news regarding stablecoins. So UBYX, a new stablecoin clearing platform supporting Hedera, has closed $10 million seed funding round backed by several major crypto investors. Again, more news regarding stablecoins. Stablecoins are doing very well right now because, we saw what happened with Circle stock. We're going to see a lot more stablecoin news, and I know it's not super exciting or fun, but we do have to pay attention, because projects that are building and have the proper infrastructure for stablecoins and top projects like Hedera, you do need to pay attention. Again, they are made in the USA. There's an applicant that is submitted an application for an HBAR spot ETF. So I would be paying attention to different things like this. So treasury stuff, stablecoins, RWA, DeFi, AI, those types of things. Investors include Coinbase Ventures, Founders Fund, VanEck, and Paxos. UBYX is a stablecoin clearing platform, and they were able to raise $10 million led by Galaxy Ventures. And their goal is basically to standardize stablecoin redemption at face value to boost adoption. And the platform will launch in Q4 of 2025. Again, Q3, Q4 of 2025. The service will let banks and fintech redeem stablecoins for fiat at par reduction friction. Partners include Paxos, Ripple, BitGo, Copper, Chain Analysis, and Fireblocks. And this is massive, actually. I love it. And UBYX will support multiple chains. Hedera, Aptos, Arbitrum, Avalanche, Base, Quantum, Concordium, Polygon, Solana, Starknet, Stellar, Sui, XDC, XRPL, and ZK Sync. Kind of a lot, right? Kind of a lot, right? And then this is kind of funny. I wanted to bring it up. Arthur Hayes says that Circle is grossly overvalued and warns that most new stablecoin issuers will fail without real distribution, calling the coming waves of IPOs a setup for investors to get wrecked. And this is funny coming from, this is pretty funny coming from Arthur Hayes, because I want to say he's a big hyperliquid investor, and hyperliquid is the complete opposite of what's going on with all the stablecoin stuff. And on that note, really quickly about interest rates. So the Fed is set to make its next rate decision today. Here's what to expect. I'll tell you what to expect. What's his face is not going to do anything at all. He's not going to. He's not going to raise interest rates, or excuse me, he's not going to lower them. He's going to remain them unchanged, Powell. So expect for a little bit of market volatility. Anyways, you guys, I got to get going. I got some work to get done. Plus, I got to do it. I'm going to be traveling, so I'll get some updated stuff for you guys. In addition to that, I got to work on an XRP video that's going to drop at 2 p.m. PT. And I will catch you guys a little bit later. Bye-bye.